Are banks becoming dinosaurs, slowly waiting for extinction, while digital currencies are building the future of money? What if your savings account, your credit card, even your local bank branch become irrelevant in just a decade? Digital currencies aren't just new forms of money, they're a revolution challenging centuries of financial control. But are we witnessing progress or the start of financial chaos? Here's the tension. For centuries, traditional banks have been the backbone of trust, the gatekeepers of money, credit, and savings. They've shaped economies, built empires, and kept our financial lives stable. But now, digital currencies like Bitcoin, Ethereum, and even government-backed CBDCs are rewriting the rules. They promise freedom, privacy, and independence from banks altogether. Sounds exciting, right? But hold on, with freedom comes risk. If banks lose their power, who protects your money? Who keeps fraud in check? And what happens when an algorithm replaces your banker? Everyone believes that digital currencies are the future. But what if the future is not as decentralized as we think? In this video, we'll uncover the surprising truth behind digital currencies and whether they're truly killing traditional banking or just transforming it.
Let's start with the uncomfortable truth. Traditional banks are bleeding relevance. Think about it. For decades, banks made money by being middlemen. They held your savings, moved your payments, and loaned your money back to you with interest. But now, digital currencies can do all of that without them. Bitcoin transfers millions across borders in seconds. Stablecoins offer instant global payments. No bank, no waiting, no borders. And DeFi, decentralized finance, lets users earn interest, take loans, or trade assets, all without ever touching a bank's system. This isn't just innovation, it's disruption on a planetary scale. When technology starts doing the job of billion-dollar institutions faster, cheaper, and without permission, the old system starts to crack. But before we declare banks dead, let's look at why they still matter. When your crypto wallet gets hacked, there's no customer service number to call. When markets crash and people panic, it's central banks that step in to stabilize economies, not code on a blockchain. And here's the paradox. As digital currencies grow, they may need traditional banking more than they admit. Even Bitcoin, the symbol of financial rebellion, still relies on exchanges and custodial platforms, which, ironically, look a lot like banks in disguise. So what's really happening? It's not that banks are dying, it's that they're mutating. Many are already experimenting with CBDCs, central bank digital currencies, digital versions of national money. That means the same control, just in a digital wrapper. Governments love CBDCs because they can trace every transaction, monitor spending, and even program how money is used. It's convenience for you, but surveillance gold for them. So, while crypto promised to free us from the system might just be using its own digital currency to pull us right back in. Here's the irony. Digital currencies were born to liberate us from banks, but they might just end up reinventing them in digital form. The question isn't whether banks will disappear, it's whether we'll even notice when they stop looking like banks.
Here's the real danger. Not that banks will vanish, but that we'll forget why they existed in the first place. Banks were never just about money. They were about trust, the glue that holds the entire economy together. Without trust, currency is just numbers on a screen or code in a network. And digital currencies, they're asking us to replace centuries of human trust with mathematical trust. That's powerful, but terrifying. Because if trust moves from people to code, then whoever controls the code controls the world. Let's imagine two futures. In one, digital currencies create a borderless financial utopia, where you control your wealth, send money instantly, and no institution can freeze your account or deny you access. Money becomes democratized. Power shifts to the people. Sounds incredible, right? But in the other future, that same technology becomes the ultimate tool of control. Every transaction monitored, every payment traceable. The same system that promised liberation becomes an invisible cage, wrapped in convenience. The choice between these two futures isn't made by code, it's made by us. And here's the mind-bending part. Digital currencies might not destroy banks, they might merge with them, forming something entirely new. A world where banking, government, and technology become one seamless system of financial surveillance and convenience. Efficient, intelligent, but maybe a little too powerful. If we don't question this now, if we just go with the flow because it's easy, fast, or trendy, we might wake up one day and realize that money didn't go digital, we did.
So here we are, standing between two financial worlds. One built on vaults, ledgers, and human trust, the other built on code, networks, and algorithms. Both promise safety, both claim to empower you, but only one can truly shape the future of how we live, work, and control our money. Digital currencies are rising fast. Banks are evolving to survive. And somewhere in between lies you, the individual, deciding who to trust, a system built by people or a system built by code. So what do you believe? Are digital currencies liberating us from outdated systems, or are they quietly building a new kind of control, one that we won't be able to escape? Tell me your take in the comments below. Do you think banks are dying or just adapting? And when the dust settles, who do you think will own the future of money? This is Donkey Debates, where we don't settle for easy answers. We challenge ideas, question everything, and keep the conversation alive. Subscribe if you're ready to join the next debate and bring your brain, not just your opinion.